Hello everyone, welcome to another session on dollar INR. Rupee has been consistently weakening and I want to show you something very interesting what's happening on the rupee and how exporters and importers should look to hedge their risk. Again, very high risk because the volatility is very high. So let's jump onto the charts. I want to show you three charts today. The first chart is the simple dollar INR daily chart. So we have a very clear cut uptrend in dollar, downtrend in rupee. We are seeing higher highs getting created, okay, and now rupee is very close to the all time lows at around 90.56, and every week, every month it is going, or rupee is declining to a new low. And even if you look at the linear regression channel, I have taken a slightly longer 150 days channel. Usually you take 100 days, but even on a 150-day channel, it is a very clear-cut uptrend. Okay, if you look at the indicators, momentum indicators are slightly overbought, but that doesn't hamper. The rupee is still under pressure because of various geopolitical factors. Okay, I want to show you another chart. Okay, let me come to the other chart. See, here I want to show you how the spot is moving compared to the moving averages. I want to show you a couple of moving averages. Okay, the purple one, look at the purple one. The purple one is the 50-day moving average, which is this one. Okay, the 50-day moving average, and the red one is the 100-day moving average. Okay, so this is the 100-day moving average. The smoother one is the 100-day moving average. So what I have plotted here is the difference between the current price and the two moving averages. Okay, so this red one, if you see, is the difference between the 100-day moving average and the spot, and the purple one, if you see, is the difference between the 50-day moving average and the current spot. And if you look at the levels, okay, if you look at that difference levels, you know, the difference between this, okay, and the difference between this, that difference is one of the highest that we have seen in the recent times. In the last 1.5 to 2 years, the difference between the current price and its moving average is one of the highest. Okay, so that tends to suggest that the prices have reached an extreme, and if you would have looked at the trend, the prices have reached an extreme in September, October, then then cooled off a bit in November, and now again it has reached an extreme in December. So prices are continuously reaching a new extreme compared to the moving averages. Okay, so another very interesting thing what I wanted to show you was how the dollar INR compares with the dollar index. Okay, so if you see here, we have the dollar index which is scaled on this side. Okay, on the right y axis, the red and the green candles, and the dollar INR scaled on the left y axis, which is the gray and the white candles. Okay, so this is the dollar INR and this is the dollar index, and here on the bottom I have computed a simple correlation coefficient chart of these two. Okay, I want to see how dollar INR is correlated to the dollar index, and if you would have seen these lines, the upside is the positive correlation and the lower side is the negative correlation. Positive correlation simply means the dollar index going higher, the dollar INR will also go higher and rupee will be under pressure. Okay, so you are able to conclude on some important conclusions using this kind of a correlation coefficient chart. Okay, but if you see here the chart, if you see history, the correlation has been very high. Consistently the correlation has been very high here. But if you see the recent times, there is a big negative correlation here, and in the recent trend, in the latest 1.5 months trend, if you see, the dollar index has gone down, but the dollar INR has gone higher. So the correlation has broken, okay, consistently broken in the last, I would say 1 to 3 weeks, 3 to 4 weeks, that the dollar index has declined, but the rupee has been under pressure. That is a very big dichotomy, something that has been highlighting some time back. I had shot a video when the correlation coefficient fell negative here a few months back. Now in these kind of turbulent times, it's very difficult to conclude or make some kind of an analysis that if dollar is going to recover or dollar is going to fall, how will the dollar INR get impacted. Now, since the correlation is broken and it has gone on the negative side, which is very different from what the history teaches us, it's very difficult to conclude. Okay. So, bottom line is rupee has been under pressure, RBI intervention is coming to a very minimalistic levels. So, the pressure will continue, kind of the pressure will continue. So, what is in there for exporters and importers? Exporters who were hedging earlier, now they are very reluctant to hedge because the premium is around 2.75% per annum, but the weakening is much larger. Importers who earlier had never hedged are now looking to hedge because obviously the rupee is consistently scaling all-time lows and it is becoming very difficult to remain unhedged. Okay, so the primary hedge recommendation from us to all dollar exporters as well as importers is to use vanilla options. Okay, there is no point in using forwards now, and what we have seen, exporters using forwards, they have lost money. Importers using forwards, they would have made money, but historically they have lost money. Now it is a tendency to make money. So it's a quite a challenging, difficult situation as far as using forwards are concerned. Okay, so the best alternative as of now as a hedge instrument is to use vanilla options. You pay an upfront premium, but once you have paid the premium, you have complete flexibility. If the market moves in your favor, you can capitalize on that favorable movement, but if the market goes against you, the option protects you. Okay, so vanilla option is something which all exporters and importers should aggressively do in the times ahead, because volatility is going to continue, RBI is going to continue with its hands-off approach, and the pressure on rupee will be there. And if there are good news coming in, if the trade talks gets through and the tariffs reduce, there will be a volatility bout of rupee gain as well. Okay, so exporters should watch out for that situation as well. So volatility is going to remain, and in such times forwards will not be effective. You need to use vanilla options. So it is an extraordinary situation. So you need to use some extraordinary hedge instruments to overcome situations like these. Okay, so that is it from my side. For more such insights, please join our WhatsApp community.